Hey everyone, welcome to this week's Finquinity podcast. So let's start talking about how bearish the market is this week.
Yeah, well, we had quite a bit of a bearish period. I think obviously it's been quite an interesting week because when we look at what really happened last week, uh, there wasn't too much because of the government shutdown, and we have been having to rely on all these secondary sources. So if I have my numbers correct, it was something like one day the job data was really good, and then the next day the job data was really bad. Like you had like day one was like, oh my god, there are 50,000 more jobs than expected. Next day, never mind, it's actually minus 150,000.
Yeah, like JK, bro.
Yeah, and so it's like what really is happening here, and that's been kind of the driver. I would not say the
Yeah,
driver. That's been kind of the catalyst of the the downwards moment. I think we were
yeah.
talking before the podcast too. I think the inflection point. You're right. Definitely happened at the FOMC meeting because while the rate cut was expected, the potential delayed rate cut of December was first mentioned, and it's basically been since through that day. If you look at the Nasdaq index, it's just been since that day the market has just been repricing the cut and moving down, down, and down. To add on to it, we also saw earnings in the last 2 weeks, and the earnings have been kind of surprising because the earnings have been actually good. For example, you had, the Microsoft earning where they beat expectations by 12, 13%. You had AMD earnings. You had Meta earnings, which I think were a loss, which we should probably ignore. Uh, Meta earnings, I think, were bad, but I think you had earnings from AMD that were good, but then the market didn't react like it was good. And it's been actually an environment for those AI infrastructure companies or the AI companies where, for the first time in a while, we saw sell the news type mentality. Q2, Q2 and Q3, I think, definitely were the moments of any AI news felt like good news. Prior to that, obviously it was a Liberation Day, so that's not the like bearish period. But this cycle is feeling like sell the news cycle, and that has me looking at Nvidia with its earnings coming up. Is it November 19th? Yes, November 19th. And I'm thinking, where is Nvidia going to go? Is it going to follow through? Is it going to deviate? What do you think about that?
So I think that regardless of where Nvidia is going, one thing that we have to, really admit is that it seems to me that when companies are doing well, even though they're doing well, markets are finding reasons to sell if there's even some sort of like cloudy lining. So, for example, maybe your forward guidance is not as great as the market expects, or your beat expectation, but expectation has been set so high, they expect you to beat it even more.
Yeah,
Um,
it's definitely
so
been that case
even
for a
though,
while.
so even though nominally speaking, you're making record profits. That's what happened to Meta, right? Palantir also did pretty well, but their stocks sold off because markets feel that their current earnings and their current growth trajectory does not justify the valuation that they're set at. Remember, what we jokingly talk about how Palantir is what 600 PE or something. It's
Yeah,
something ridiculous,
yeah.
right? So even though they are moving along quite nicely and these companies are all profitable, markets I think have been feeling very jittery since FOMC because there's some runway. No, there's they're running out of space in terms of how much runway they have left. So December was priced in with a rate cut. Now that's priced off, right? We're at 60% or something. When you look at the Fed probability curves, all the cuts after December has all been reduced a little bit. So that has been quite hawkish on equities. and equities really needed some reason to justify these valuations. When we looked at Meta before it got clapped and it went to minus 15%, it was at 750. So when Anchor said, hey, Meta was going to go from 700 to 750, it was correct. It did. But the earnings really shattered the momentum, and I think has taken the NASDAQ with it as well, because the NASDAQ has also been chopping and has been having struggles in retaking all-time highs. So when I look at NQ, for example, where are we at? NQ is it's right below KRM. So it got rejected at KRM today, actually.
Yeah.
And what does that tell us? I think there's some sort of consolidation happening because people aren't really confident. There's some anxiety with buying at our orange our orange zone, and as a result, I think traders should be a little bit careful and they should hedge their risk. I'm currently in Meta right now. Meta is currently in bearish trend, so it's kind of tight spot. But I bought some calls that expire in April, quite some time away, and I've literally been shorting Meta along the way. So every time Meta goes up, I just sell some short duration calls in order to lower my cost average and hedge my bets, and it's been a winning solution so far to the problem that we're in. Now, I don't think the markets are going to collapse and people are going to go into shambles. Okay, using Meta as an example, it's not going to reach like Liberation Day lows. Okay, it's not going to go to like April lows. I think there's going to be a pullback. The NASDAQ might even go into correction territory, so minus 10% from its all-time highs. Maybe it even touches bear market territory, but there's going to be a lot of justifications for that. If the markets go that low, there's going to be some sort of catalyst that causes that to happen. Maybe the unemployment rate is moving faster than expected, or the government shutdown is like day 100 and we still haven't made any progress. Okay,
Well,
I think
looking at the
that would
forward curve, though, I mean, that's actually very indicative of where the market is going to be. The forward curve for 2026 is basically a flat line, and that's rare because you have to imagine that you have to acknowledge that the Nasdaq is expected to grow some 15% every year, at the very least 10%. So looking at the forward curve, which was once like almost like a linear parabola, like a linear, not parabola, linear like a slope, it's looking quite flat, and so that definitely that is worth point of concern. To kind of offset that, though, I do feel that speaking of the government shutdown, we are heading towards we're heading towards having bullish tailwinds, given the fact that the government shutdown might be ending soon. Last Sunday, yesterday, we had the Senate vote 60-40 in favor of ending the government shutdown. Now, nothing has been official yet, and today's market rally has been catalyzed by that one singular event. And so that is something to look forward to. I don't think that, well, I shouldn't say I don't think. I actually don't know much about the government shutdown at the moment. I don't expect it to continue all the way through December. I would expect it to be over by mid-November, but the current administration is definitely very hard to read. And to kind of compound these um bullish tailwinds that are coming from the government shutdown, I think another bullish event that could be happening is definitely going to be the data. Obviously, this is all predicated on the government shutdown, but the last data that we did see from unofficial sources, or secondary sources, I should say, is that the data looked to be promising in the sense that the inflation seemed to be down. Unemployment, I think that data is like still iffy, but it did look like that was also moving down from its peak. And so these are the last few data points, which all give a green light to bullish momentum, I feel.
Yeah. So I think on that note, there might be some catalyst to take some of the bearish sentiment away, right? We are running out of sellers and people who are perma bears. When we look at Anchor, for example, the Nasdaq rebounded quite well on Friday from the lows, right? And since then, we've just been moving up even more. So I think short term wise, we definitely flushed out some leverage longs who were a little bit too close to being liquidated, and we flushed them out. So we're consolidating quite nicely, and I think that if markets continue to remain a little bit bullish on the bullish trend, there is potential that we can go back to the highs. Now, is that likely right now? No, because it's below our KRM line, and it seems like we lost a lot of momentum, right? Looking at the anchor system. So one way to, I think, gauge where the risk sentiment is we should probably look at crypto and see what they're up to right now. So crypto has basically been shutting the bed. Yeah. They have not been doing super hot. As recent as last week, we hit like 99, 98, right? So I think that's telling us that from a risk appetite lens, there's just not a lot of risky appetite at the moment. And I have said this before in our discussions, but if you want to take on some risk assets and buy a dip of any sort, your best bet is probably going to be not just the index, but the mega caps, because that's where all the capital and trades are concentrated in, and that's where the profitability is at the moment. You're not going to be able to buy small caps in this environment, nor should you buy something like Bitcoin or Ethereum or any garbage coin out there like Farcoin. So, what I see here is be cautious. If you are going to take a long position for the long term, like let's say you're getting a paycheck for retirement and you want to put it in somewhere, you could buy this dip. I don't think that's a problem, but you don't want to go too leveraged on it, nor should you just go long. You should probably hedge your position by selling some cover calls along the way and selling them above the KRM line or in the overbought line in order to make some money along the way and reduce your costs.
I think what you say is a very good point in the sense that while we might be headed for a local high, I think there's still room for it to be, a bigger dip. This dip might be, like in the grand scheme of things, like a small dip with a bigger dip incoming. Right now we're definitely still in the go by ear mode. Look at the news that's happening and react to it. It's been that way for like a month now, hasn't it? It definitely feels like it's been that way for definitely a couple of weeks where every day, every other day, there's some kind of news which pushes the market in one direction or the other. And
Yeah.
I mean, I think the biggest news at the moment is just going to be the government shutdown. Can you think of any other like news catalysts that we can kind of prepare for?
Yeah, like probably the Supreme Court stuff. So that's going to be months away. I think they just started the ruling.
Mhm.
You look at Holly Market, which is basically this betting thing, where they bet yes or no on something. The Supreme Court is now trying to decide whether or not the tariffs are legal or not,
Mhm.
right? And the Trump administration has made a lot of noise regarding pressuring the Supreme Court to basically vote in their favor and basically saying that these tariffs are legal. Now, I think that if the Supreme Court basically says that the tariffs are illegal, you're going to have a dilemma of wondering how the hell is the federal government going to refund all those businesses that has lost a lot of money due to the tariffs? And how would you reconcile the fact that the administration would have overextended their authority and basically uh, hampered economic growth? And if these tariffs are illegal, I think the markets will react very well because you're basically removing an inflationary pressure off the market, and you're going to give some more room for the Fed to cut. Now, if the tariffs are legal, I think it creates a more complicated matter because now you're basically saying, hey, the administration can do whatever it wants without the permission of Congress. And not only that, the markets are going to be facing this headwind for the next three more years, right?
Mhm.
So what does that say about bonds? Well, bonds have already reacted strangely because when the chances of the Supreme Court ruling in favor of the Trump administration has gone down, according to the poly market, TLT actually went down.
Mm-hmm.
Okay, so what does that mean? Why would TLT go down if the risk of inflation is removed? Well, the answer, I think it's quite simple, right? The answer is that tariffs are growth headwinds. They affect growth. You remove tariffs, growth concerns fade away, okay? And that gives room for the Fed to stimulate, and that can reignite inflation. And bond traders are long-term lookers, and they see this and they say, you know what? Maybe there's more risk appetite than expected, so they take some money out of the bond market. That's what I think the read is. I think things are definitely subject to change because if I remember correctly, the ruling is going to be made in June or something. So bonds have a lot of time to react between now and then.
I have two talking points. One talking point is going to be about bonds, which I think I'll come back to in a second. A question I had is, I'm on Poly Market. I'm looking at the vote for Supreme Court rules versus, in favor of Trump's tariff, and the chance went from them ruling in favor at 42%, even as far back as October 31st. But since that day, the odds have dropped to 25%. Do you know what the catalyst was for such a huge drop in?
Yeah. So basically, what happened is that the expectation before the rulings began was the conservative side of the Supreme Court um, was going to be more sympathetic to the Trump administration's policies. So you had a lot of Trump appointees, so Supreme Court judges that were appointed during the Trump administration in 2016 to 2020, that they would be expected to rule in favor of the Republican Party. But when you look at the questions that they were asking the Trump administration, the questions were quite scathing,
Oh.
and the questions were quite aggressive in asking, you know, the potential overreach of the executive branch, and also what expectation and what are the purposes of some of these tariffs. So if I recount some of these questions, one of them was like, it makes sense for you to tariff China, but why in hell would you tariff Canada, for example?
Mm-hmm.
Right? So what does that say? I think the Supreme Court, to a certain extent, is sympathetic to the policies, where they understand that maybe some of these tariffs are going to be justified for national security, sure.
Yeah.
But initiating a global trade war with every single country on the planet, including a country like Lesotho, right, with a GDP per capita of maybe like $1,000, charging them a higher tariff rate than China is absurd, right? So the Supreme Court is basically saying, where's the logic in this? And I think markets, the poly market, is reacting to these logical questions and reducing the probability that these tariffs are going to stay in place. Now, I think that regardless of how the court rules, the administration will use this time between now and then to find a way to circumvent that. Even if the tariffs are somehow deemed illegal, they're going to implement these tariffs under a different justification. And the courts are going to have to find a different reason to basically say, no, take this down. And that's just going to delay the time, create more obstacles, right? And ultimately impede growth and create headwind for equity markets.
Right, that makes sense. Obviously, the current administration does seem like the kind to exploit the speed of the judicial branch to push their motives and achieve their
Sure.
goals. It's just though it is quite a worrisome, obviously from like a geopolitical lens that the U.S. decided to basically become the big bad bully on the playground, and
Yeah.
all of a sudden, so well, it's obviously a very interesting geopolitical debate, and I think we'll probably not go too far into it, but it
No, we're
is
not
yeah
going to do that here.
yeah
Yeah.
it is very interesting. What we should talk about
Yeah.
next though is the TLT, and looking at TLT and the overall bond market. It's been very strange. I think obviously the bond market is reacting foremost to the FOMC meeting when we got the confirmation that it might be the case that we have to wait and see what happens in December. It went from like a near guaranteed rate cut to a hey, we just did a rate cut right now. We want to see the impact of it and then we'll cut.
Yeah.
But obviously, data is few and far between. How reliable data is in question, given what happened literally last week or the week before with
Mhm.
the consecutive days of conflicting job data. So it's interesting. What was the initial schedule like for the 2026 cuts? Do you know when the first cut was expected?
I think the next meeting is happening in January.
hmm So were the
Yeah.
cuts expected for
No, no, no. The
January?
cuts, the probability was, I think, were quite low. I can kind of like check it right now.
Yeah.
Give me 1 moment. Let's see. All right. So assuming that December is 350, 375. Okay. Okay. Yeah. So in January, the odds of holding the rate is 53%, and the odds of cutting is at 23.
hmm
So basically, what's happening here is there is a higher likelihood that the market will cut, or sorry, that the Fed will cut in December because the probability is still around like 63% or so. So we're still within the realistic probability of a cut, but past December, when you're looking at January, March, and etc., all those periods are now all in the air. We're not really sure.
hmm I think that's
Okay.
that's the biggest impact of the bond market, right? Because like, the bond market
Yeah.
doesn't care about the only one cut; they care about the cut
No. Yeah.
cycle,
Yeah.
and
They
so
care about the curve. Yeah.
yeah,
Yeah, and not only that, to potentially add to maybe a little bit of hawkishness, the BOC. So going back to Canada a bit, the Bank of Canada has indicated that the easing cycle has ended.
hmm
So in terms of cutting, they're done cutting. That's what they're saying.
yeah,
And at the moment, they're going to hold and wait until maybe we hit into a full blown recession. Now, are we in recession in Canada? I think so.
yeah. Definitely
Um,
feels like it.
yeah, it feels like that. My gas tank certainly tells me maybe we are, but
hmm
am I going to talk about that? Not in this podcast. No. We talk a lot about Canada, but I feel like in this recording, I think that we should focus mainly on the U.S. because there's just been so many things going on due to last week's like price action
I think most of the earning is over. Season's over. There might be only a few
for the most
things.
part.
Yeah,
Yeah,
I think
yeah.
the only big one. Let me just have a look at my. Oh, I went to the wrong sheet. The only big ones that I think I'm tracking are just Nvidia. I think Disney, but not really too relevant. Nvidia, yeah, Nvidia coming up November 19th. So I mean, the earnings cycle is done. Whatever the impact the earnings have had, the momentum has been kind of following through.
Mhm.
So it seems to me, looking in the days ahead, it seems like there aren't too many in the market catalysts to look out for. It's just going to be extraneous news, especially about the whole government and whatever data we can get, macro
Yeah.
data, that's going to drive the market. So
Yeah.
keep an eye out for those. If you're obviously look out for secondary sources, if there are any secondary sources of repute, the market will probably react to it. So
Yeah.
I think my advice for the next coming weeks is going to be look out for news, plan out what might be happening, and just be very careful. I think it's not a bad idea to buy if you're a long-term person, but be ready for another dip. And for the short-term people, be ready for a random surge upward or downward.
Yeah. That's what I would say too, because we're approaching an inflection point where some of these tickers are hitting bearish trend, and once you're in bear market, there's going to be violent bear market rallies. You don't want to be naked when you're shorting these tickers. Like these bear market rallies can be quick, but they can also trap you. For example, we're looking at Meta right now, right? Like Meta is up. Let's see. Wait, where's Meta? Meta's up like almost 2%, so 1.84%, right?
Mm-hmm.
That's not really common for a mega cap like Meta. Or hell, even when we look at Palantir. Let's take a look at Palantir. See if it's. Let's see if Palantir is very.
I think Palantir's
So
doing okay.
Palantir went from 172 to 190, so almost like a 7% like ride up today,
Yeah.
right? Like these are all indicative features of bear market rallies, because usually what's happening here is that you have people who are liquidated very quickly, and then you have these weak volume trades that are pushing up the price back to where it was before and getting people to FOMO in. All right. And then once you get FOMO, it makes another dip and then you get flushed out, right? Because these dips end up being very dangerous and there's no guarantee that there's any support from here on out. So, what I would say is if you're going to buy into the market, be careful with your sizing. But whatever you do, don't short this bear market.
Mm-hmm.
Okay. If you want to short, you at least have to hedge. If you're naked shorting, you're gonna get blown up.
Yeah, probably. Unless you're long dated, which I don't recommend anyway, because market has a natural upward pressure. So
Yeah,
yeah,
exactly. Right. But I think we can call it wraps for today.
yeah. Sounds like we
Yeah.
covered
Okay.
quite a bit of topics. Half the
We
news.
covered quite a bit.
Yeah.
Yep.
Thank you so much for watching, and see you guys around. Bye bye.
All right. Bye.